Hi, my name's Jess. I am a beginner stroke intermediate level trader who's trying to learn my way through the oil market. I've actually popped a disclaimer down in the video description, but I really just wanted to add that I am not trying to be a content creator in any way by putting these videos on YouTube. I don't have any fancy backdrops. It's just me in my bedroom in Weymouth. Um, Basically documenting my personal experience of trading and trying to learn the market, for myself to look back on and for my friends to catch up and check on my progress. Plus, it really helps kind of cement the information that I've learned by speaking it out loud. Hopefully, I can also inspire other traders to look at the fundamentals that drive their market that they trade, and maybe just to flex my knowledge a little bit as well. So, with that being said, I'm going to start off where I left on the last video, which was a technical and fundamental prediction for November. Fundamentally, I did mention Trump. Unfortunately, I didn't put that I didn't speak it out in the video. The same as my technical prediction, a bit amateur. I forgot to mention it, but I did pop that information down in the video description afterwards. How did it play out? Okay, technically not too bad. Overall, I said I was a bear head. Price didn't break 72.50 in any kind of meaningful way. So that kind of played out. And with the information about Trump, I think it is just far too early into his administration to be able to gauge what's going to happen. But overall, every single policy that Trump has mainly are bearish. There's a couple which could make things bullish for oil price. But I learned a lot actually over the election. It was the first election that I've traded through, and I'm not going to sit here and pretend that I know anything about US elections because I don't. But for me personally, it was just really interesting to see how it affected oil price and the impact it had on the market. So, now I'm just going to dive on in and go through each week of the fundamentals. It's all in yellow here. You're welcome to screenshot, zoom in, because I could go through all these for ages. And what I've decided to do is just focus on the main resistance and supportive factors throughout the course of November. Okay. So let's start the TOP with Top Trump. He definitely was a bearish factor. Obviously, I've just spoken a little bit about him, but initially him getting elected on the 5th pushed price down, and that was mainly because the dollar rallied and pushed commodities down. I would love to talk about the dollar in more detail. I'm still working out loads about it. It behaves so differently compared to a market like gold, which is actually against the dollar. So I think I might do another video about the dollar and how it correlates with oil in the new year, maybe. I'm going to move on to Chinese and global demand. Now, I've been speaking about this in the last couple of videos. You're welcome to go back and have a look if you're interested. But Chinese demand and global demand as a whole has been a huge, predominantly bearish factor for oil over the course of the year, certainly spring and summer, and going into this latter part of the year. Why? Because China is the biggest global importer for oil. So if their economy is weak and their demand is low, that means that their demand for oil is low. And globally, the energy agencies have actually downgraded their global demand forecast for 2025 again this month. So that is consecutive. I think it's the 6th consecutive month of downgrading the forecast for 2025, which has an impact on oil price. It will certainly cap gains and keep things in that sort of downward motion. Going on to the ceasefire talks. Whenever the Middle East, because obviously the Middle East has again been another huge factor for price over this year, whenever a ceasefire is spoke about or mentioned, it does generally send price down. But then the analysts will say it's an overreaction because ultimately there isn't actually a ceasefire. The fighting doesn't stop, and still the threat to Middle Eastern oil remains. So during week two, actually, it was the Lebanese media. They announced that they had had a US proposal for a ceasefire between Lebanon and Israel. That's not Palestine or Iran. And actually, it kind of provided a level of support throughout November until this fourth week here, when there was an official sort of ceasefire announced. It did push price down. But like I say, it is only between those two countries. It's only a 60-day truce. And ever since a ceasefire has been announced, there's been loads more escalation of fighting and tensions, particularly in Palestine, where the genocide continues. So even though it has pushed price down here and been a bearish factor, again, we're just going to have to see how that sort of situation plays out over the next few weeks. Okay, so we are going to now go on to the flip side and go on to the supportive factors. We're going to be looking at the fundamentals which kept price up, lifted price up, or provided a level of support throughout November. Okay, so OPEC and their production in delays. We spoke about OPEC in my last video. OPEC have about 50% of the market share and supply half of the world's oil onto the market. So therefore, things that they say and do have massive impact. For the last few months, they have been withholding 2.2 million barrels per day of oil from the oil market because price is low, and they know if they add those barrels back on, price will continue to go down, and obviously they don't want that. So they have been drip feed, or the plan was to drip feed 180,000 barrels per day back onto the oil market in November, December, January, and every month going into 2025. But because of the price of oil and the state of the market, they actually delayed that decision in November, which has provided support because there's less supply on the market. But now we're sort of like towards the end of the month, they were now looking at the January supply. So December, there's going to be the cuts. In January, they're going to make a decision in a couple of days on the 5th of December as to what they're going to do in January, and either withdraw those barrels on the market still, or if they're going to add them back on. So Thursday the 5th, I think, will be the next sort of main catalyst, certainly from the OPEC point of view, depending on their decision. But also it's going to be a juicy meeting because they're looking at 2025 forecasts as a whole. So let's see what happens with that one. Okay, so moving on to Russia and Ukraine. Most of the geopolitical tensions that we've seen over the last year have come from the Middle East. However, Russia and Ukraine have been bubbling away under the surface. And over the third weekend in November, there was a major escalation where Russia attacked Ukraine's energy infrastructure. The problem that this provides for the oil market is that the threat to supply to Russian oil and exports, because Ukraine have been given Western missiles that can get into deep Russia and essentially take out their oil infrastructure, or affect it in a big way. So that's why the risk premium for Russia and Ukraine was added into the market here, and price just went up that week. There was a lot of bullish factors. Anything bearish was massively capping gains, but overall, we were predominantly bullish. I think it was the biggest weekly gains of the whole month, just under 6%. Moving on to fuel demand and crude crack spread, which is my favourite piece of terminology that I've learned so far. And that's mainly because I have the mentality of a teenage boy and find crude crack spread really funny. But I'm going to just explain about it in a bit more detail now. It has definitely provided a level of support to the market. Why? Because crude crack spread is essentially the profit margin for refiners between a barrel of crude and then the end refined products that they sell. So gasoline, diesel, jet fuel, those kinds of things. So the refiners will buy more oil when the crude crack spread is high, because it means they can get more money out of each barrel of oil once it's turned into refined products. If the crude crack spread is low, it means refiners will buy less oil because they can't get as much money out of each barrel of oil once it's been refined. So I kind of hope that makes sense. At the beginning of the month, the crude crack spread was high. I think it was like 3.5 month highs. So refiners were buying in here. They were buying in here, but we also had quite a lot of downward pressure from Trump. So it provided more support. And hand in hand with this goes fuel demand. So obviously, if there is high fuel demand, then the refiners will buy more oil to keep up with that demand. And actually, when you look at holidays like Thanksgiving, we saw massive support being given here to price because of Thanksgiving and the fact that fuel demand was higher because, people were traveling across country by car, by plane to see family and friends, etc. So it all kind of makes sense, right? So that was the month as a whole. Interesting what they were seeing these drops and ranges twice over the course of the month. And that's something over Christmas that I think I'm going to be looking at when we're in a bearish sentiment. How many times these drop and ranges happen? Is it a pattern to get excited about? There's only one way to find out, and that's look into it. So that's something I'm going to be looking into in the past and going forward. But overall, for the course of November, we started the month on $70.62. We finished on $68.42, which was a decline of 2.2% or $2.20. So that was how the news looked. Now I'm just going to flip on over to the trades that I took. Okay. Just waiting for it to load up. Let's pull that over a little bit over here. Okay. So my yellow circles here are my entries. My green circles are my exits. So visually it looks quite sort of straightforward, right? But actually this month, even though it was actually a good month for me, it could have been way better. And there's just so much missed opportunity in this month here. Okay, so my first trade was actually Trump election. Because I read fundamentals, I know that Trump was bearish for oil price. So there was no technical influence here. It was purely based on fundamentals and the fact that Trump had got into power. I took that on Thursday once this sort of all the announcements were coming in thick and fast, and that kind of played out well. Over the weekend, there was a Chinese data drop, CPI and PPI, which is Consumer Price Index and Producer Price Index, and I knew that it was bearish for price. So also coupled with the fact that the dollar was still pumping with Trump in, and there was loads of other bearish news factors as well, right at the start of that week. So I took my sell at 70.50, added more positions into the original sell from here. Price come down. I kind of like clung onto it throughout the week. But I really felt it was running out of steam here. We started to get a bit volatile, and I closed out at 67.95. So I was pretty happy with this here. It was a decent profit and definitely my best trade of the month. I was still bearish because, quite frankly, there had been no other bullish news come out of any real high impact. Any bullish news that did come out in this week was low impact, and I just waited for price to come up again before I took another sell. Again, completely fundamentally based. There was no technicals in this whatsoever. So I can feel the techies cringing here, but it played out. I closed at 70.50. Oh, sorry. So I took this one at 69.42, closed out at 67.05. Glad I closed out there because look what happened. That's where Russia-Ukraine kicked off. I actually waited for a demand zone here, and it came up, retested here. I took the trade. It was quite kind of short-lived for me as a retail Forex cash account trader. So price actually came back up, and the bullish news was too strong that week and pushed price back up. Took me out in a little bit of profit, nothing to get excited about here, and I didn't take any trade at all on the following week, the last week of the month, and that was mainly due to because I was really busy. So overall, it was a good month. I'm not taking as many trades as I used to because of my work pattern now. I'm kind of out of the house more, so I have to be more opportunist. And fundamentally, Trump was my friend this month. The CPI and PPI data release was my friend this month. I know techies really do view these candles as a story, and they want to be hitting order blocks and support and resistance zones and bouncing off trend lines and all this kind of stuff. But for me, each of these candles really does have a much deeper meaning. And yes, there is a visual story here about what happened to the price of oil over the course of the month. But each one of these candles is essentially a data drop, a piece of news that came out onto the market, overriding bearish sentiment, which just won't go away. I got taken out here by Russia, Ukraine. I won on the dollar rally and Trump. Do you see what I mean? It wasn't because it hit this demand zone, which is what it's trying to do, and that's great. But it is data that drives it to these technical areas that we're looking for, and it all just has a deeper meaning than what you can kind of visually see there, which is essentially just a load of lines. So on the strength of that, I'm really happy to continue. I'm really happy that I've sort of found my fundamental flow. Technically, I know I can do better. But just a couple of things that I mentioned on my last video. The first thing I mentioned is that I was looking to execute my way through the market better in 2025, the year of execution, which is actually the year of psychology. But for now, it's the year of execution. And also, I mentioned that shoulda, woulda, coulda, didn't, the fact that I don't dwell on trades that I'm not included in, or moves I'm not included in, sorry. However, I'm going to use week 3 as a classic example of the kind of moves I want to be catching going forward. And the main reason for that is instinct. So I was laying in bed at market open on Sunday night, that's 11 p.m. UK time. I was laying in bed looking at my broker. My broker and price retested a daily low here. Okay. And I read over the weekend about about the Russia-Ukraine news, and I knew that that was bullish for price. So my instinct was to buy. Shoulda, woulda, coulda, didn't. I didn't buy. Why didn't I buy? Because this is me. Oh, I'm laying in bed. I'm not looking at my charts. I can't take a trade now. This is me. But the thing is, bearish news could come in. I haven't looked at all the trading view stuff yet, and there's more news drops might happen and da-di-da-di-da. This is me. Oh, yeah, I need to wait till Monday until things really even out and settle out before I make up my mind and judge proper sentiment and make my decision about where I'm going to go this week. Nah. So price lifted. As I said, it was the biggest weekly gain in oil over the course of the month. Why didn't I trust my instinct? My technical reasoning was there, my fundamental reasoning was there, and the biggest confirmation was my instinct. And I think that's true in every part of life. Your gut instinct is your biggest confirmation to do anything or not to do something, whether that's in a work situation, everyday life, your relationships, whatever that might be, trading. I think if instinct is a confirmation for you, take the trade. I certainly will be going forward, and it's going to be this kind of moment that I remember going forward, when I'm in those kind of instinct moments. The technicals are there, fundamentals are there, take the trade. So, but shoulda, woulda, coulda, didn't. I'm not going to dwell on it too much. I just really wanted to show an example of the kind of moves that I do want to be taking going forward and why. Okay, so another thing I'm just gonna just quickly mention is the challenge that I set for myself last month. I did speak about the monetary goal and the fact that I was aiming to end my second year of trading at break even. This month here chipped off just under a couple of £100 off that. So I have lessened the loss this year at the moment. Who knows what's going to happen? But I just think realistically, the challenge probably is not going to get met. I'm probably not going to do it based on my performance over the last few months and based on the fact that we are now going into the quietest part of the year. And I'm guessing it is because I haven't ever traded my way through Christmas before. So it'd be really interesting to see. Well, I have, but not oil. So this is my third Christmas trading, but my first oil trading Christmas. So I'm going to be looking at the chart massively, see what happens over Christmas. And that's kind of cool because I'm a geek like that. But with regards to the challenge, I'm presuming things start slowing down a bit. I'm not going to slow down. I'm going to carry on going until the 20th of December. But hey, it ain't over till the fat lady sings. I might be able to come back with my update in January and say that my challenge has been achieved. So, but I doubt it. Okay, so moving on, I'm gonna kind of just like start winding down now. I like to finish off the videos with a prediction for the next month, so for December. And I think anyone who does critical thinking, if they're a conspiracy theorist or anyone who does their own research into things, you know, they will research all the different opinions, all the different views, they'll look at facts, misinformation, and then based on their belief system, kind of separate the wheat from the chaff and come up with their own predictions, ideas about how things are going to work. And I'm sure that's the norm, right, in life. But for trading, I kind of do the same. A techie will look at the candles and make a prediction for the future. I'm looking at the fundamentals and looking at the future, what I think is going to happen. So that's how I make my predictions. And based on what we're seeing at the moment and what I said earlier, that the fundamentals aren't going anywhere. Chinese demand isn't going anywhere. War isn't going anywhere. I really do feel we're going to carry on in this range over Christmas. A bearish wedge, if you like, between kind of $72 and $66. But like I said, I don't know. I haven't traded a Christmas before. I'm just basing it on the fundamentals. We've got the next catalyst or driver being the OPEC meeting on the 5th. Remember, if they withhold barrels, price should go up. If they put the barrels back onto the market, price should go down as a sort of general guide. But obviously, I'm just looking forward to seeing how it plays out. I'm really looking forward to January. I don't know about you. I know a lot of people get depressed over the new year, but I just think it's an amazing opportunity to start fresh. I feel like there's kind of abundance and new opportunity for growth. It's a fresh start. We've kind of broken the back of winter, and for my people in the UK, we're only 7 weeks away from vitamin D coming back into our lives. And it's my birthday in January as well. So I like January. I'll definitely be coming back at the start of January for another update. And I'd just like to take this opportunity to wish everybody a very Merry Christmas. I hope everyone gets what they wish for. And lots of love to everybody. If you made it to the end of this video, then feel free to drop some Christmas emojis down in the comments to let me know you made it to the end. And I'd just like to thank everybody for supporting and watching me. And Happy New Year, Merry Christmas, and I'll see you on the other side. Take care.